Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. This is a show where we take you through all the stocks that are buzzing away in trade, either on the back of research or technicals. But before we get started with all the stocks, let's take a look at the markets. Vinny, good day for markets coming in. In fact, Nifty touched those record level.
It's every day a record level down the river again saying.
Yeah.
But interesting day, right? Like you were mentioning, 23,411 was the last record. Now we crossed that mark as well. At one point of time, we were higher and we were trading at 23,441. So yes, we came slight bit off the day's highest point, and the record high levels. Still, look at the momentum, it's managing to hold on to 0.6% of gain. That's the benchmark indices. Let's pull up the broader markets because that's been very interesting. And that gains and the momentums in the broader market surely has continued. They continue to outperform the benchmark indices. Look at the mid cap up almost 1%. The small cap too is trading with gains of more than 1%, 1.1% uptick there. What we're also watching out for is the PSU name. So let's pull up the Nifty PSU Bank as well as the Nifty PSC because they are among the top sectoral gainers. When you look at it, PSU Bank's managing to hold on to 1.2% gain, and PSCs, that's the other public sector entities, that's managing to hold on to 1.8% of gain. So yes, we have seen a lot of moves coming in a lot of names. So look at Concor also in the FNO name. That's seeing a very good up move among the top FNO gainers. So yes, we're watching out for Concor. Other than that, a lot of other stocks that have been buzzing, LIC Housing, Oracle Finance, HDFC AMC and all of that. But what's not doing well today is the FMCG pack. It's been that spurt coming for Nifty FMCG last week around the election verdict time, and that time we had seen FMCG that was buzzing, but this time that trend again is not something that's continuing, and Nifty FMCG is down 0.4%, and all those whether you look at something like a Marico that's down and out, Pidilite Industries, your United Spirits, Godrej Consumers, all of them are trading in the red, and even Britannia Industries trading in the red. So yes, what we're seeing in terms of the market, surely we're seeing good moves coming in from the PSU, PSC side. FMCG not managing to hold on, and today what's supporting the markets is Reliance. Reliance Industries is holding on to gain of almost 1%. Maybe HDFC Bank among the top supports coming in and pullers coming in for the market. HDFC Bank, L&T, Bharti Airtel as well as an ICICI Bank which are supporting the market, while clear pressure coming in from names like the consumption side, so HUL, M&M, Britannia, Titan, all of them are causing a bit of that downside for the market. So yes, a situation bit coming in for the FMCG pack again. Keeping an eye out on that, but that's how the market is looking like. Not a bad day for the benchmark indices or even the broader markets managing to hold on to good gains.
Absolutely. But with that, let's get started with all the stocks that are buzzing away in trade, and they're really pulling up the markets. And for that, we're joined by Dhwani Patel, who's the founder of Finversify on the technicals. And from our research team, we're joined by Ansh. Hi, both of you. Welcome to Fatafat. And let's get started with all the stocks. The first stock that we will be speaking about is Tube Investments. Now, Tube Investments, the update is on the fundraising in the TI Clean Mobility Private Limited. The company and TI Clean Mobility Private Limited is a subsidiary of TII, have today entered into a definitive agreement with South Asian Group Invest and South Asia EBT Trust for additional subscription towards the compulsory convertible preference shares of 160 crore rupees in TICMPL. Now, with this proposed investment, TICMPL has completed tying up with the target fundraise of 3,000 crore rupees from TII and the other investors. On the back of that news flow, we can see Tube Investment trading with gains of over 1.5%.
Okay, surely keeping an eye out on that. Let's move on to the first stock on technicals. Dhwani, very good afternoon. And the first stock that you're picking up is MCX. Today among the top gainers in the FNO name is when you're looking at in terms for MCX. But what is it that one should be keeping an eye out on in terms of the up move for the stock? Last 1 month, flattish move. Today we are seeing that bounce up coming in. So could we expect this run up to continue?
Good afternoon. When we are talking about MCX on the technical front, we are seeing that the stock has been trading into a range formation, and we've seen this that the stock is giving today's price action is giving it a cross above its important exponential moving averages on a daily chart, as well as on the FNO side. We are seeing open interest being built up in this particular counter. On the daily charts, even the RSI is giving a positive crossover. So there are multiple confirmations that we are getting that the bullish move is to continue over here on the higher side. From current levels, 3700 is a stop loss that one needs to maintain over here, and the next target for this particular counter is of 4080. Once we cross 4080 over here, the next number on the higher side is of 4270.
Okay. 4270 is the number that one could watch out for MCX. But let's move on to the next one, and we have Adore Welding. This is in focus on the back of a block deal that we saw happening. Now, ace investor Ashish Kacholia has actually sold 2.85% stake in the company. This is around 3.8 lakh shares in the company is what he sold, but there are buyers for this as well. We saw Quant Mutual Fund that is actually one of the buyers who's bought around 2.5% stake or around 2 lakh shares in the company. That is Quant Mutual Fund account, Quant Manufacturing Fund of theirs specifically, and the other fund of theirs also, that is a Quant Mutual Fund for the PSU fund side. That is also bought 0.7% stake in the company. That's 1 lakh shares. So yes, almost most of the shares that were sold by Ashish Kacholia has been bought in by Quant Mutual Fund, keeping an eye out on Adore Welding. Today, not managing to hold on to gains. We're seeing a bit of a decline there, subdued down 0.3% in trade.
All right, Dhwani, coming to you, Deepak Nitrite is the counter that you have picked out. Dhwani, a lot of techies have been picking out this counter. In fact, the fertilizers and the chemical space that has not really moved, has now started picking up. In fact, all the techies have been talking about this. Tell us, what are you penciling in for Deepak Nitrite?
So basically, the reason why most of the technicals are on talking about fertilizer and about chemical side is that when you form an equal weighted index for all of these counters, we are seeing an upward rise, the strength coming in these counters as compared to the index over here. There is an uptrend that is expected in these counters. Deepak Nitrite particularly is in focus today on the technical side for the reason that we've already seen that the stock is trading into a consolidation zone. We are moving from the bottom of the range again to a swing trade on the higher side. On the bottom, the support level that we are looking up at over here is of 2280. Given 2280 holds out in this particular counter, we are looking up for an upward swing over here on the higher side of 2580. So it's a buy from this current level for a target of 2580.
All right, that was Deepak Nitrite for you, gaining strength there. But Wipro is the other counter that is in focus today because the IT and the software solutions major has launched an artificial intelligence AI platform called Lab 45, and that leverages generative AI, machine learning, ML and deep learning technologies to enable companies to realize enhanced efficiencies, transform business functions and enable industry-specific solutions. On the back of this new launch, Wipro is in focus today. In fact, it was trading higher in today's morning session, but has given up those gains, but is currently trading with gains of 0.7%.
Okay, surely keeping an eye out on that. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break. Welcome back. You're watching Market Fatafat on ET now, and a lot of action that's been happening in the world of IPO, and we do have a new IPO that will be coming in and opening for subscription, and that's going to be next week. So yes, the IPO will be opening on 19th of June to 21st of June. That's DEE Development Engineers India. The price band is going to be 193 to 203 rupees. Total IPO size is going to be 418 crores. Out of that, fresh issue as well as OFS. But to talk about the company, talk about what are the plans for the IPO funds, we are joined by KL Bansal, CMD of the company, as well as Sameer Agarwal, CFO at the company, joining in with us. Thank you so much, gentlemen, for joining in with us this afternoon on ET Now. Mr. Bansal, I'm going to start with you, right? If this is the first time you're joining us, many more interactions that will be planned. But could you start by talking, one, about what is the plans for the IPO in terms of 418 crores? Where will you be using the fund? And what is the main business that the company is focusing on versus your peers? How are you differentiating yourself?
So just to give you an answer on this, the primary portion of the issue size is 325 crores. So out of 325 crores, 175 crores shall be utilized towards repayment of debt, 75 crores shall be utilized in the form of additional working capital, and balance 75 crores shall be retained as general corporate purposes. And balance is the OFS portion.
Right. Also, you said the 175 is your debt repayment. You're going to ease off your debt with that. What will be your debt portion after that? And can you give us a sense of what will be the annualized interest cost saving due to that repayment?
So at present, on group level, the company is having a debt of 400 crores, and after repayment of debt of 175 crores, the total debt level on group level shall remain on 225 crores, and the overall finance cost on the entire debt is around 9 to 10%. So we shall be saving around 17.5 crores to 19.5 crores going forward per annum after repayment of debt.
Okay, surely a saving coming in after the repayment of debt. But Mr. Bansal, also if you could highlight in terms of what is that one could envisage in terms of the growth outlook. I know you all are not allowed to give forward-looking statements, but currently that we are seeing in terms of the numbers that are there for December 2023, that was the last number that we had. Revenue was at around 557 crores. How do you see it building up in terms of the trend there? Mr. Bansal, I just wanted to know in terms of what is the trend that we could be expecting from the company in terms of growth. What is the outlook? Okay, I believe we have just snapped the line with the management. We will surely reconnect with them to understand more in terms of the outlook of the company and what are their plans to do with the business going forward, the expansion strategy there. We'll connect back with the management of the company, but surely an interesting one to watch out for is going to be DEE Development Engineers India IPO, which is opening up next week. But I think let's just keep it going with the stocks till we reconnect back with the management. And Dhwani, coming to you for the next stocks. Central Bank of India is the stock that you've picked out for us. What's the word for Central Bank of India in terms of a target that you're keeping over here, and where do you see it moving?
We did see a breakout coming in this particular counter in February this year, and from there the same breakout level has acted as a support region over here for quite some time. We are seeing a bounce coming in from the same levels, and the next target for this particular counter on the short-term basis is of 74. Once we cross 74 over here, further momentum should be seen building up in this particular counter. But for now, 74 is the next target that we are watching out for. On the lower side, the stop loss that one needs to maintain is of 63 rupees 50 paisa.
Okay, keep an eye out on those levels over there. But yes, we're connected back with the management of DE Development Engineering, and I was asking you, sir, that in terms of overall, what is it that you're expecting in terms of a growth trajectory that we could watch out for from the company? 550 crores is what one has already reached in terms of the revenues in December 2023. How has the momentum been in terms of the gains that you've seen so far?
So you must be knowing that our company has a legacy of 35 years, and we have been growing since day one to till date, except for the COVID period. In December 2023, for 9 months period, we have closed our revenue at 545 crores. And in last fiscal 2023, we had a top line of 595 crores. So, since the economy has opened post-COVID and there is a lot of capex is on both nationally and internationally, company is working in the capital cycle. So, company sees humongous amount of opportunities going forward, not only in power sector but also in oil and gas sector. As you know, the hydrogen is on the cards, and we are expecting good amount of green and blue hydrogen business. there is a lot of scope of process piping solutions under that domain. Further, we have also started operations in the field of pilot plants, and company has done really well in this domain as well. And as you know that the company is largest in terms of installed capacity in India, and it is ranked amongst 10 top process piping solution companies worldwide. The company expect good amount of growth going forward.
All right. Go on, Mr. Bansal.
Yes.
So, I was just saying that since we are doing more than 50% export historically, we have a lot of opportunities in the overseas market, particularly from North America. We have a very good clientele base over there. We are working on the topmost customers in the world, including North America, Europe, Africa, and all those countries. So, I will also like to just point out that we never had any dearth of orders during all the legacy of our 35 years, and we do not expect that the order volume will be any problem. And so there's huge lot of opportunities and huge lot of margin expansion probabilities lie ahead us.
Right, I'll come to you, Mr. Bansal. You have expanded into new business verticals also, and you just mentioned how, your margins could expand. You already have, since I mentioned the new business verticals, how are that likely to contribute to the margins? What is going to be the margin accretion? And plus, you also have 7 manufacturing facilities in India. What are the expansion plans for that? Are you planning to, increase that?
We have already expanded whatever we wanted to do is that, we are right now working on our major expansion in Anjar facility, for which phase 1 is already commissioned, and phase 2 is likely to be commissioned in the month of September, by September, and it shall get commissioned. And, once that facility becomes fully operational in March 25, whatever expansion is anticipated in next 3 to 4 years, it will be done. We shall not be looking for any more expansion, till we are able to fill these facilities fully. So, in our capex plan will not be there much after March 25.
Okay. Thank you so much, Mr. Bansal, as well as Mr. Agarwal, for joining in with us this afternoon, talking to us about the company, what we should be expecting, and good luck for the IPO. Hope to see you more often after the IPO, and good luck. Yes, IPO opening up 19th of June to 21st of June, DEE Development Engineering. That was the management of the company. Let's move on and keep it going with the stocks that have been buzzing in trade to stock number 7. Ansh, Cummins India, why is that in focus?
Yes, so actually Goldman Sachs has come up with a brokerage note, and they have given a neutral rating with a target price of 1,940, which is way below the current market price. They believe that the overall domestic demand outlook is offset by export weakness, and there's some slowdown could be expected due to pre-buying driven by emission norm change as well. Also, they believe that the potential price competition might affect their revenue. But if you see on chart, the stock seems to be moving upward, giving a breakout from 3-session consolidation and also surpassing about that 20 TMA level. So for those reasons, the stock is in focus today.
All right, Dhwani, coming to you then. You have also picked out Cummins for us on the technical side. Tell us, what are you seeing on this on the charts for Cummins?
Absolutely. The charts are totally talking opposite to what has been told about in the rating. We are seeing a breakout coming in this particular counter. Overall, the derivative data is on the positive side, reflecting that a up move from current levels is expected, with the target price on the higher side that we are looking up now is at 3,900, and a stop loss that one needs to maintain over here on the lower side is of 3,570.
Surely keeping an eye out on Cummins India, different story. That is what one could expect from what the rating is saying. But let's move on and keep it with a bit more in terms of the industrial capex side story. We have UBS that came out with a note on the industrials, and what they're saying is that they expect most of the policy initiatives to continue. The theme will continue to play. So whether you look at something like a defense, manufacturing, electrification, or mobility, industrial efficiency, those momentum will be expected to sustain, is what UBS is highlighting. They They do like CG Power the most, and that is the most discussed stock that they were talking about, given the exposure to multiple themes that CG Power has. So look at CG Power, buzzing away in trade. It's among the top picks for UBS. In the pecking order, it comes at CG Power, HAL, and then ABB. So yes, we've seen CG Power, ABB, as well as HAL, which all the three stocks today were managing to hold on to gains. So we're going to be keeping an eye out on the industrial pack today.
Absolutely, we will be keeping an eye out on all the industrial pack. But for now, coming to you, Ansh, Thermax is what you've picked out for us. And, Goldman Sachs came out with a note on it, and the stock is seeing a movement after that. Tell us what the note says.
Yes, that's right. Goldman Sachs has remained sell rated on the stock, and their target price is around 2,710. So actually they expect power, steel, food and pharma sectors to drive demand, but the market is willing to look out much further than the next 2 years and give a higher multiple. But the underlying technology is still in early stage. Also, if you see chart, the stock seems to be consolidating in a 5-session range and have been taking good support at 20 DMA today as well. So unless and until we don't see a decisive breakdown, we may see some consolidation happening around the current levels.
Surely keeping an eye on Thermax, managing to hold on to around 1% of gain. But let's move on and talk about IRCTC. Dhwani, IRCTC, at sometimes, you see that sharp run-up coming in for IRCTCs. These railway stocks have surely seen a very, very strong buzz as well when you look at it and the move that you see in the last 6 months. IRCTC, what's the view on this in terms of where should we be seeing it headed? Because there was not much of a participation that came in so far from IRCTC.
So basically right now there are three particular sectors which are in focus from all the technical front, given that now that the election results and the news have surpassed, the next thing that we are looking up at is the budget. And where fertilizer, chemical, and then the next comes is the railway, which comes into focus. We've already seen that today Titagarh Railways, even IRCTC, RITES, RVNL, these are all seeing buzz in the upside. IRCTC particularly comes in the focus on the technical front, for the reason being that the stock over here on the in today's trading session has crossed above its important EMAs, and we are also seeing a volume increment coming in over here on this particular counter. From current levels, a swing high of target price of 1130 can be expected. On the lower side, the stop loss that one needs to maintain is of 980. Given this level surpasses, we will also see 1200 coming in on this particular counter. So IRCTC has more fuel left into it. It's a buy from the current level.
10 for y'all. IRCTC is what we are keeping an eye out on.
Absolutely, Vinny. But let's shift focus to the yellow metal then. Centre has imposed restrictions on the import of certain gold jewelry and articles, except those under the UAE Free Trade Agreement. Let's go across to our colleague Sameer Dixit to get more details on that.
In a move to reduce the smuggling of gold and also to reduce the import of gold, the government has taken a big, bold decision. As per the official notification released by DGFT, there are 5 categories of gold which has been now put under the import restricted category. The notification mentions that the gold studded with pearls, the import has been put under the restricted category. Similarly, the gold studded with the diamond, whether it be of 7102 or 7104, the import has been restricted. Additionally, the gold studded with the precious stone or semi-precious stone, it has also been put under the import restricted category. But the notification also mentions that there are certain clauses under which the import can be allowed. The exception mentions that the import of gold from UAE can be allowed. It is under the FTA agreement. So these sort of steps the government has taken. But what led to the taking of this step? So government has been constantly receiving the inputs from the investigating agencies that there is a surge in the import of gold, and also the smuggling of gold has been increased in the last couple of months. Then there was an interdepartmental consultation that was done by the Commerce Ministry. The consultation was done with the Department of Revenue as well. And after the detailed discussion, the government has came to a point that there is going to be an import restriction on the gold, on the 5 categories of gold. There was input that from the least developed countries, from the LDC countries, the gold import has risen. There are 2 aspects of it, that the import has increased. In one part, it was observed that where the zero duty is there, from these countries the import has increased, and also where the duty is quite minimal, the percentage is quite less. From these countries as well, the import of gold and also the smuggling of gold, it has increased a lot. So government has taken a big bold decision to curb the import of these 5 category of gold, and the notification mentions that this steps comes into with immediate effect.
Okay, thank you so much for that update coming in on that front. But Dhwani, you picked out Max Health for us. You know, when you're looking at it today, surely the stock is buzzing. Last 6 months, we've managed to see a decent return of 25% almost. What's the word for Max Healthcare today? A new story starting for this one?
We are seeing a breakout coming in on daily chart. We have seen that the stock made over here all-time highs around 910 levels. From there, we are seeing a sideways movement over here in this particular counter. But in today's session, we have seen a breakout coming in from the downward sloping trend line of resistance over here on the daily chart. From current levels, we can go buy on this particular counter. Given 910 surpasses, we will see fresh all-time highs coming in on this particular one, and we are also seeing that the volume is backing over here in the breakout over here. We are seeing 2x of volume of the average 20-day volume over here in this particular one. Over here on the lower side, the stop loss that one needs to maintain is of 840, looking out at the target of 910, post which we'll see fresh highs.
All right, that's Max Health for you. But with that, let's slip into a short break. Don't go anywhere. We'll be right back with some more stocks that are buzzing away in trade.
If you like this video, then like, share and subscribe to ET Now.